And I've looked at other decisions, other significant summary judgment decisions, and there has been an instance where she's taken 6 months from the time that all the briefs were submitted to issue a ruling. She's also done it in 3 months. So I think it's fair to say that the best educated guess that I or others could make is that it's 3 to 6 months. So a lot of people feel that maybe in March we get the decision. I say it's sometime between the end of March and the beginning of May.
In today's video, Attorney John Deaton discussed the latest with the SEC Ripple XRP lawsuit, the recent summary judgments from Ripple and the SEC, and what's next for the procedural process, likelihood of a settlement soon. Before listening to him, please ensure to smash the like button and subscribe to the channel.
We're in basically wait and see mode, right? What that means is that all of the legal briefs, all the memorandums of law and things of that have been submitted. And now it sits before Judge Torres for her to render a decision. The only thing that I could think that would be a big deal prior to her ruling is if she orders an oral argument hearing. Hinman emails and things like that, there were oral arguments. And so Judge Torres doesn't always schedule an oral argument for summary judgment. Sometimes she has, sometimes she hasn't. I would be very surprised if she doesn't schedule an oral argument in this case because of the magnitude of the case and how significant it is. And also because of many of the other issues, right? The SEC, I'd be a bit surprised if she doesn't because maybe she wants to inquire on the SEC. Are you really saying the token itself is a security? Are you really saying that secondary market sales are also securities? But, we'll wait and see. So unless that happens, then the next big thing is her decision. And I know everyone wants to know, well, when is that going to happen, right? And I've looked at other decisions, other significant summary judgment decisions, and there has been an instance where she's taken 6 months from the time that all the briefs were submitted to issue a ruling. She's also done it in 3 months. So I think it's fair to say that the best educated guess that I or others could make is that it's 3 to 6 months. So a lot of people feel that maybe in March we would get a decision. I say it's sometime between the end of March and the beginning of May. That's my best guess. Now, she could very well come down with a decision in February and surprise me, though. They have abandoned, let me make it clear, not only have they not fulfilled their primary mission to protect investors, they have taken steps to hurt those investors. For example, this case, the Ripple case, Ray, it's not a fraud case. There's no allegations of fraud. There's no allegations of misrepresentation. There's no allegations that Ripple withheld information. They're a private company. And so what this case is a strict liability case that whether or not XRP, when Ripple sold it, whether or not on those occasions it constituted an unregistered security. Non-fraud case, very important case. But so who did the SEC theoretically file that case on behalf of? A failure to register case, Ray, is all about disclosure, right? Because there's no fraud. So it's just simply saying that because this asset the SEC believes is a security or was utilized as a security, Ripple didn't disclose certain information to the public. All right, that's what the case is about. So theoretically, they filed the case on behalf of XRP holders. That's the theory. Who are they protecting? They're protecting, allegedly, they're protecting people who purchased XRP and were not privy to the information that Ripple is privy to. That's really what the whole case is supposed to be about. So XRP holders is the goal. They're supposed to protect us. When I tried to get involved in the case, what did they do? They not only did they object, they attacked me. And I'm just saying, listen, you can go after Ripple all you want, but these secondary market sales, people who are utilizing the ledger for its utility to send money, cross-border payments, person to person, right? Or businesses who pay their employee in XRP, or or developers on the ledger or the people in the UK or Japan or Switzerland or Singapore, the United Arab Emirates, where XRP has been deemed not a security. All I was saying is, hey, this is important information. Focus your case. And they objected. They attacked me. They attacked XRP holders. They did the opposite. Let's take it outside of Ripple and XRP. The FTX case. When did the SEC get involved? They filed a lawsuit against FTX and Sam Bankman-Fried on behalf of 30 venture capitalists. So who are they protecting? They're protecting those VCs who risk money all the time as a part of their business model. They didn't file a case on behalf of the retail customer of FTX. And so they have completely abandoned the individual investor. They've abandoned accredited investors, such that Link to, sells to and all those things. They just don't care. There's nothing more I could say other than they've abandoned us. The SEC has a significant budget. I don't know exactly what it is, but I know Gensler was asking for, 2-point-something billion for the fiscal year. He doubled basically the personnel assigned for crypto. He doubled it, right? That's a 100% increase. If they had 25 people, now they have 50. If they had 50, now they have 100. So he's dedicated an entire division, so to speak, or subsection of a division for crypto. But where has his focus been? His focus has been on BlockFi, no fraud. Ripple, no fraud. Library, no fraud. Dragon Chain, no fraud. And the list goes on and on and on. And so, Ray, you and I know that a company like Link2 wants regulations, right? They want smart, tailored regulations. I want smart, tailored regulations because that's what's holding this entire industry back. But we can all accept the fact that there are pump and dump schemes. There are fraudsters. So while Gensler and his team have been going after good actors claiming that they just didn't register, they didn't make a certain disclosure, Celsius has happened. Sam Bankman-Fried has happened. He's having multiple meetings, and Tom Emmer, a congressman, stated that it got so far that a short form disclosure may have been developed that Sam Bankman-Fried was behind and that they were close to some kind of deal. Now, I don't know if that's happening. All I can tell you is that a U.S. sitting congressman said that. And so while he's meeting with the devil himself, right, and having multiple meetings, cutting some kind of deal, we all know that Sam Bankman-Fried was against DeFi and going to agree to certain provisions that hurt other parts of crypto to gain a regulatory advantage. That's regulatory capture, where you have one particular person who happens to be the number 2 donor behind George Soros of the sitting administration cutting a deal while all this fraud's going on. And that's the problem. And it's a problem of focus. Why are you going after Kim Kardashian, dude? Why are you, at least in her tweet, I'm not defending Kim Kardashian. I'm just saying it was a tweet, right? Or an Instagram, and it had hashtag ad. Like, it was letting it be known that it was ad. But he goes after Kim Kardashian. He does a video. He goes on CNBC and he's saying, look, this is what the SEC is doing to protect consumers. That's not protecting consumers. In the meantime, Celsius is happening, FTX is happening. And so that's either he is corrupt or incompetent or both. That's my personal opinion, right? And if you look at competency, he should be fired and he should resign just based on the fact of all this has happened under his watch. And when you go back to when he was the chairman of the CFTC, MF Global happened under his watch. And what was his excuse? His excuse, Ray, was that he couldn't figure out how to access his work email from home. So I just want people to think about this. Gary Gensler testified at Congress, right, that when this was all happening, he couldn't access his email. Ray, he's considered a child prodigy, and he was he was the youngest partner in the history of Goldman Sachs. The guy is a smart guy. Everybody says his problem is that he's always the smartest guy in the room, right? right? But this child prodigy, the youngest partner in the history of Goldman Sachs, couldn't figure out his work email. And that's why, blah, blah, blah. So you know that his integrity and his credibility are questionable at best. But let's just look at competency. Forget corruption. Competence. He's incompetent. All this has happened under his watch. He should go. Let me take this. Here's the thing you need to know. It talked about innovation. The best thing for your viewers to know is that in 2018, and it's on the Crypto Law website, there's a video of Gary Gensler while he was at MIT, and he states on stage in 2018, April 2018, that the crypto market needs clarity. Those are his words. He even said, Ray, that Ripple, the company Ripple, and Ethereum deserve clarity, and they need it. Now, that was 2018 when he was not chairman. We fast forward to today. He's chairman of the SEC, and he can do something about it, right? And what is his position? His position is that it's always been crystal clear, and that he's not going to create new rules. He's not going to change any laws or provide any more guidance, that the Howey case from 1946 and all the other things, case law, is enough clarity, and that these companies need to come in and register. He won't give guidance. So clearly, capital formation, let's ask this. In the BlockFi bankruptcy, do you know who the number 2 largest creditor is? The SEC. All right, because there was $100 million settlement, remember, between BlockFi and Gary Gensler's SEC. BlockFi had paid 70 million of it. There's still 30 million owed to the SEC. So BlockFi's bankruptcy, our SEC is the second largest creditor that is above customer deposits. So how does that happen with capital formation? Are you helping companies capital formation when you're the second largest creditor in a bankruptcy? It's absurd. That's what I meant by corruption, incompetence, a combination. So there's that. They had a settlement. BlockFi agreed over their Lend product, right, that they would pay the SEC $100 million. They didn't pay it all yet. They were making payments basically to the SEC. And so that's affecting their capital formation. That was the point I was making. But the bottom line is, when it was FTX who gave allegedly the $400 million loan to BlockFi that would save BlockFi, right? Now, it was all a fraudulent thing. Really, FTX, Sam Bankman-Fried, wanted to gain access to those deposits that BlockFi had, because we've learned that part of that deal was that BlockFi had to hold the assets on the FTX exchange, right? That's how Sam Bankman-Fried was using customer funds. But when FTX exploded, BlockFi had to file bankruptcy. And so when you go into bankruptcy court, the first thing you ask is, who do you owe money to? And so the second largest person or entity that BlockFi owed money to was the SEC, because they were still making payments on that $100 million loan. And this is a beautiful point. It's an awful point, but it's beautiful in the sense that it shows all the things we're talking about. Obviously, it's not capital formation they're laying up to, right? Mm-hmm. Second of all, nothing changed, Ray, when the SEC taxed, I call it a tax, when they went in and they took $100 million from BlockFi. What was established in the industry that changed? All that happened was, you've got to pay us $100 million. There was nothing that developed. There's no registration that took place where people can look at the BlockFi example and see, oh, here is a short form that the SEC worked out with BlockFi that now us entrepreneurs can look at. Nothing changed. It was, pay me $100 million or I'll sue you. That's it. Right? On a non-fraud company who's trying to provide some kind of business that will help, investors and consumers. And so that's what I'm getting at. If you look at BlockFi, it's probably the best example of not protecting investors, not fulfilling your mission as far as capital formation, and just shows you the whole incompetency or this regulation by enforcement against non-fraud actors. And that's where we have. And, the SEC now, as I've predicted, I think they're going to sue an exchange. And I think they're going to sue an exchange and say, you're you're selling unregistered securities. Now, will they identify which ones are unregistered securities? We don't know. Gensler now has come out and said something that I predicted was going to happen, unfortunately, over a year and a half ago. Gensler is saying that Ethereum, the staking of Ethereum makes it a security. So Ethereum is in the crosshairs again. And you've got people who are, listen, I even said you could make arguments. If you allowed Gensler, if Gensler was in charge in 2015, he'd have said Bitcoin was a security. There's no doubt in my mind. He'd have said, oh, look, that mining, there's only a couple miners or 3 miners that represent over 50%. That's the common enterprise. And people are relying on miners to speculate and get a profit. Therefore, it's a security. I'm not saying that. I'm saying if he was in charge in 2015, he would say it. You know,
interesting.
Who's he protecting? He's protecting the incumbent players. He's protecting the incumbent legacy financial system. What's going to happen? You can mark my words. What's going to happen is when the incumbent banks, when the Goldman Sachs and the JP Morgans and the Morgan Stanleys and the BlackRocks and all of them, when they have a substantial portion of this, right? That's when all of a sudden there'll be some kind of deal struck and there'll be some kind of clarity when those incumbent players get a bigger share. That's what I believe is taking place, and we'll see if it plays out.